Buyers driving up property prices. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from Domain and question whether it's legit or a bit of real estate FOMO. Wouldn't be the first time. So, Sydney property, low interest rates and increased borrowing power drive up prices and send buyers back to the bank. Now this is interesting because, well, our cash rate is at quite a low level, 0.1%, and you can fix mortgages. You can get fixed mortgages under 2%, everyone, right now, and variable are pretty low. These are the lowest rates that we've had. So the concern is that more and more people are talking about, regardless of the whole debate about, loosening or making it easier for people to borrow money, loosening set lending standards, is the fact that people are simply just worrying about if they can make those repayments now. Can I make them now? And not even contemplating what could happen if in 5-6 years' time rates hit 6 or 7%. And in some ways, you can't blame people because what do we just hear in Australia over and over again? Property, property, property. Get into property, get into property. And one could make a legitimate argument that the vested interest in our political leaders have demonstrated that they are willing to sacrifice the quality of life for future generations to maintain the property bubble. Do you think that's a fair statement, guys? I'm going to have a shot of coffee. You let me know in the comments. It's good. I really should get a coffee sponsor, shouldn't I? But, I literally have trained myself to drink the cheapest, nastiest, instant stuff. I used to be a coffee snob when I was younger. Now, not anymore. I guess I drink it straight. Don't get me wrong, I like a good cappuccino, but still. So let's look at this article by Kate Burke. Record low interest rates are helping property buyers borrow more, with the average wage earner able to spend $41,000 more at auction than a year ago. But as prices rise, they're getting less for their cash. There you go. They're juicing up the property market, everyone. That's what we've been talking about for ages. What's concerning is the Reserve Bank doesn't seem to worry about it. They're more concerned with jobs. And if the unintended consequence of that just happens to be a bit of an increase in property, that's just the price you pay. Be happy you've got your crappy job and can't afford a house. Interest rates were slashed to boost the pandemic-hit economy, and the Reserve Bank this week emphasized it will keep rates low for the next 3 years, even if house prices soar. With cheaper mortgage repayments, a borrower on an average income of $89,000, who has saved a 20% deposit, could have a budget of $806,000. Research from the comparison website CanStar found. $800,000 mortgage. That's a lot. I'm just thinking about that. That's nuts. A year. I mean, if you're on $800,000 mortgage and then all of a sudden interest rates go up, you better hope that the, lackluster wage growth that we've experienced in most of our working lives takes a sudden turn around somehow. A year ago, the same buyer would have had less borrowing power and a budget of only $765,000. Both figures assumed their home loan was at the lowest variable rate. There you go. There's the lowest variable rate. Look at that. 199, a variable. But with crowds of potential buyers turning up at auction, all armed with more cash, a bigger budget is unlikely to translate into an extra bedroom or more desirable suburb. Well, this is the thing, everyone. This is what I've mentioned many times before. It's the candle-on effect. We're seeing it manifest right here through the increase in money supply due to lower borrowing costs. So then more money is created as people rush out to secure those pre-approvals for those mortgages, and then they apply it all into housing, and then that sector bubbles up. Let's just hope it doesn't spill over into other sectors, so cost of living doesn't go through the roof. The house might not be any better. It might just be the same house, and they're paying more for it, CanStar Group Executive of Financial Services, Stephen Mickenbacker said. it obviously does push up house prices. There's no question. People turn up at an auction with more money in their pockets. It means that demand is higher, and inevitably that bids prices up. The auctions, demand for auction, for like standard specky places in the middle of nowhere. It's not a fine work of art. So, low interest rates may also attract some buyers who would have not been able to afford a home if mortgage costs were higher, adding to competition in the market, he said. The jump in borrowing power has been outpaced by the movement in house prices, with Sydney's median house price jumping about $55,500 over the December quarter alone to hit a record high of $1.211 million. A rise of $76,000 from a year earlier. Someone on a low income of $50,000 could have upped their budget by nearly $19,000 in the past year on the lowest variable rate, while a high income earner on $120,000 could increase their budget by $57,000. And you've got to realize the median income, it's around 55, guys. When we go to the ABS and we see all those high figures, a lot of that's skewed because of the mining sector and the others. ABC now. ABS. Which, I mean, that's just part of the challenge that we face here. Because property, housing, is the economic pinata that the government hits every time it wants candy to fall out. And in this case, candy is economic stimulus. Am I just getting too cynical now in my old age, everyone? Maybe it could be, maybe it could be. With prices surging, analysts expect a possible clampdown on lending in the coming months, which could target borrowers with small deposits or high levels of debt compared to their income. AMP Capital Chief Economist Dr. Shane Oliver warned that although housing affordability is pretty poor, the Reserve Bank is required to focus on the broader economy when setting interest rates. Their focus is a lot broader than just the housing market, and when they do look at housing, they look in terms of financial standards, the doctor said. Its primary focus is the economy and particular inflation and employment, he added, warning the travel and higher education sectors were still struggling, while overall wages growth was low. The prospect of low rates for years to come has fueled strong buyer demand and given Sydneysiders the confidence to spend more than they previously would, said Thomas McGillen, head of sales at Bresk Whitney. Well, here's the thing. If you're pretty certain that rates are going to be locked in for the next few years, where's the money going to go from those rates? Are we going to see a correction to the market, which could happen? Are we going to see a correction when Mortgage Keeper, which isn't Mortgage Keeper, well, the mortgage holidays end, when JobKeeper disappears entirely, when the, end of this month, when the ability for businesses that were are below under $1 million in debt or in revenue that were trading while insolvent and are trying to build themselves out of it start to fall? When are we going to see that? That's the question. Or are people just thinking, well, it's just going to keep going? Here's the thing. The government's just intervened so much. They've juiced up the market so much. What I'm worried about is what crazy things our governments will do to keep it all going. Because there's nothing free, guys. It's never free. This magic money train, this deal with the devil that you do, there's always a price to pay in the future. So you can feel good. Your house is going up in value. Fantastic. Good. Particularly if you're in there. But you've got to understand, guys, we're all going to pay for it one way or another. They'll tax it out of us. Don't worry. They'll find a way. Maybe they'll bring in those death taxes. What do you reckon? Wouldn't that be great? Paying GST your whole life, paying income tax your whole life, paying business tax your whole life, paying a levy for this, that, and the other. Maybe it'll be a toilet. Well, there are toilet taxes. Yes. Remember, we looked in North Queensland. The hotels, they have toilet taxes. Those exist. And then, we just need a death tax just to round out the whole screw you to live in Australia. So, he said some house hunters looking to buy since last year had increased their borrowing power by 10 to 20% as banks offered competitive rates and eased some of the stringent checks seen in the wake of the Financial Services Royal Commission. But with house prices in select inner city suburbs already spiking 10 to 20% this year, Mr. McGlynn said those who could not up their budgets had to compromise on where or what they bought. Well, isn't that just a normal part of life, guys? You need to go somewhere else. See, I'm thinking wrong. You need to have everything instantly so you can get that Instagram photographs and get that following. That, of course, I'm too out of date. So Lower North Shore buyer Melanie Duca was relieved to finally buy early this year after more than 6 months of searching. I had to keep expanding the scope because it was so competitive, she said. It was really not what I was expecting. The market conditions had improved so quickly. After 4 months searching the lower North Shore and eastern suburbs, seeing homes snapped up within days or selling well above price guides, she enlisted the help of a buyer's agent, Lauren Gowdy of Rose & Jones, and purchased a 4-bedroom home in need of renovation in January. I thought when I started searching that I could get somewhere really completed and perfectly in my budget, she said, but I compromised in terms of the renovation. She said buyers were increasingly having to compromise or head back to the bank, with some clients looking around the $2 million mark, increasing their budgets by more than $500,000. Okay? I mean, it's going crazy. We've got viewers who live down in Sydney who bought in before all of this, and they're saying in the comments, it's just going nuts. Property's going nuts. It's going crazy. So especially if they were also selling in the same market, helping them keep pace with the rapid price rises. Ms. Gowdy, who felt home prices jumped about 20% since November in prime markets along the eastern suburbs, lower North Shore, inner west and northern beaches, said buyers would need a sizable uplift in their budget if they hoped to buy a similar or better caliber property than they could afford late last year. Ray White, New South Wales chief auctioneer, Alex Patero, said he was consistently seeing buyers talking to their banks to see if they could increase their budget, with some even overextending themselves to avoid missing out at auction. You might get one buyer a week that will say, I've got to call the bank and hopefully they will give me another 50 grand after they've bought at auction, he said. However, the bulk of buyers were not maxing out their budget. Adding prices in some segments were up about 15% since the start of the year. With his agency's auctions drawing an average of 8 to 10 bidders in recent weeks, he could not see strong buyer demand easing anytime soon. So what do you think, everyone? Should we all jump in there and get into property? Or a little bit more FOMO, or a sign of what's happening when you juice up the market, when you artificially create these low rates? I mean, the RBA, they can't predict wage growth. They fail at wage growth again and again and again. Now they're juicing up housing. And this is a big part of actually having a stable nation where people will hook up, get married, get a house, and raise a family. Where you want a quality of life. Where you want peace and prosperity, not just struggling against the grind, just trying to get in. What do you reckon? It feels like in some ways the government and the banks are working against us, at least when you're trying to get in. And then, of course, once you're in, you want them to shoot it all up because you want to feel like you're a brilliant genius because you bought. I mean, is it that much of an act of, entrepreneurship if you happen to buy in a Ponzi scheme that was going up? Come on. Anyway, guys, thanks for watching. Let me know your take on this one. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, and I will see you all next time. Bye for now. Nope. Wrong thing. Well-oiled machine here at HeiseSays.